Welcome to RCast, the official podcast of the RChain Cooperative. RChain is a complete concurrent blockchain platform designed for maximum efficiency at minimal computational and environmental costs by utilizing proof of stake. Beyond our platform, our investment partner, Reflective Ventures, funds organizations that are working within our core mission statement to create a better world by enabling social coordination in robust, secure, and scalable ways. I'm Derek Barris, the Director of Content for RChain. Each week on RCast, I'll be talking with the founders of our portfolio companies, as well as co-op members, staff, and other figures in the RChain ecosystem about the most pressing issues in blockchain today. Please check out rchain.coop to learn more about the platform, our community, validator sale, and information on becoming a member. How about banking from your motorcycle? That's a new one that I heard on this podcast. Today we're featuring RCast, a financial services network facilitating local economic development through on-demand mobile banking and crowdsourced problem solving. What that really means is every time that I look at RCast's Twitter feed, I'm discovering something new about what they're trying to create in banking. Today my guests are Jose Fernandez, who is the president of RCast as well as Atlas. And that distinction will be put forward at the end of the podcast by Jose. So just understanding why in the beginning I talk about Atlas, but RCast is the network by which Atlas operates. And there's a lot of synergy there, as you'll hear. And the other guest is Ori Shimoni, who is the R&D lead for RCast and Atlas. One of the first times I came across RCast was through a Medium post where they're attempting to bring electricity to 600 million Africans that do not have access to regular electricity. And they're doing a blockchain solar-powered initiative. A lot of their work is actually focused in Africa. They do have aspirations to spread out from there, but right now there's plenty of work to be done there. And what they're creating is a network of people who are banking from their phones. Some of their agents, from the money that they've made through their agent fees, have been able to buy mopeds and motorcycles. And one thing that Jose mentions during our talk is that a lot of banks have gone into Africa and tried to set up shops, not realizing that a 9-to-5 operation is not going to work when someone has to walk 10 to 20 miles to get there, and they're only open during the hours that those people are working. So it makes sense that the agents would be able to bank from their phone and go and show people how to do the same. Now, one term RCast is fond of using is underbanked. We often hear about the unbanked, but again, as you'll hear, we talk in the beginning a bit about the underbanked and what that means. And essentially, it is for people who, yes, they might have an account, but they don't have access to loans or growth capital or anything that most people, at least I know in America, have quick access to in some capacity. So this is really just a fascinating conversation, learning about where blockchain is going to be inserted into banking, how our phones are going to be our banks. I mean, for me, it already is. I very rarely have to visit my branch. If I do, it's only because some problem has arisen that couldn't be solved from my phone, which is getting rarer and rarer as these technologies progress. You can learn more about RCast at joinrcast.com and on their Twitter feed, which is at ACX_network. I highly recommend following them there because, as I said, every time I see them pop up on my feed, I'm learning something fascinating. So I'll let these two gentlemen explain what's going on in the world of Atlas and RCast, and we start with Jose discussing what underbanking means. So on the Atlas Money website, it says that you are focused on an age of economies shared, What does that mean?
You see, what Atlas is trying to do is to build not only on the shared economy that we've seen, but actually build economies that are shared amongst each other. What Atlas does is it empowers anyone in Africa with a smartphone to be able to bank, to bring the financial tools that are needed by anyone with a dumb phone. Very much like the sharing economy examples that we see in Airbnb or Uber, where anyone with a car, anyone with an apartment can offer those services to anyone that needs them. In our case, anyone with a smartphone and a little bit of cash can unleash the power of not only a checking and savings account to economies that have been informal for their histories, but also bring about microloans, microinsurances, peer-to-peer money sending, international remittances, the full banking suite that you and I have grown to take for granted on our end of the world.
Right. One of the things that I noticed in one of your Medium posts is that you talk about blockchain for the underbanked. Very often we talk about the unbanked, but what do you mean by the underbanked?
The World Bank states that 2 billion adults are unbanked at this moment. I strongly believe, and the Atlas and the Access team strongly believe, that number is a gross misrepresentation of the actual reality. So for starters, the World Bank placed the number in 3 billion just 10 years ago, less than 10 years ago, and has reduced it vastly because they believe that the effort that has been undergone by governments like the Indian government or MFI institutions or nonprofits of opening bank accounts has solved the problem. But the truth is that actually World Bank numbers now prove, and the United Nations back numbers prove, that the vast majority of those accounts open have never been used, don't have a single transaction on them. And we see very worrisome trends where countries like Nigeria, Mexico are actually losing bank numbers. So people are actually dropping the banked economy and going back to informal banking systems. And more importantly, anyone with a bank account count as banked. That is just not fair. They don't have access to loans. They don't have access to growth capital of any kind. They don't have access to, and for example, for me, the greatest example is M-Pesa in Kenya. M-Pesa is a fantastic example where a telecommunications company did a spinoff that was vastly successful, where what they do is they offer mobile money, which in Africa means sending money via SMS. It's kind of like a Venmo on SMS kind of tool. It exclusively allows you to send money. Those people are counted as banking on the numbers that are being managed around the world. They don't have a bank account. They don't have a savings or checking account. They do not have access to loans. They do not have access to insurances of any kind. They are underbanked. Because they have one of the many financial tools that we name as banking, they are considered banked. And I believe that the unbanked is a good way, is a way for the United Nations, the IMF, and the World Bank to feel better about their work. But it doesn't fully represent at all the reality of financial insecurity and lack of banking services that the vast majority of the world population suffers from.
I've noticed that you've worked for a number of, not nonprofits, but companies that are for social good and progressive good. I'm wondering when in your career you started discovering blockchain and cryptocurrency and how that fits into your current work at Atlas.
I am originally from Spain. I'm an economist by training. I worked hard. I lived very closely in my own skin the housing crisis that brought about a financial crisis to my country as a chartered economist and while working for very big financial institutions in my country. I mean, I even wrote a letter to the Bank of Spain because I believe that they were being part of this crime that was being committed to the Spanish people on allowing these banking institutions to be able to underwrite impossible loans for mortgages that were houses that were extremely overpriced. You know, eventually that whole thing collapsed. It was a bad thing for the economy, but it was truly just terrible for the families that it took their assets, and not even Spain, when they have to execute your mortgage, it doesn't even eliminate whatever debt you still owe for the mortgage once it's executed. So they were left with a debt and no house. So I saw what happens when poor financial policy crudely affects its constituents. I wanted to do something about it. I became a trade officer for my for the diplomatic service of Spain. I came to the U.S. as a diplomat. I was in D.C. as a trade officer, and right around that time, Spain was granted a temporary seat at the UN Security Council in New York, in the United Nations General Secretary in New York. So I came to New York. This is over 5 years ago. That's when I met James and Mickey, who were working on blockchain technology. I had never heard of the technology before, but as an economist, I was just thrilled at the fact that there was some sort of technological innovation in the space of ledgers and accounting, which hadn't happened in hundreds of years. We've been basically running on the same motor that the Medici family was running for in the Italian Renaissance. So I was excited about technology, and they were mainly looking at it as a debit card for a Bitcoin account. And it was through that friendship and through them introducing me to the blockchain technology that I tried to find. I mean, the way I saw blockchain was a way to remove the middleman, and I couldn't think of a more ugly middleman than banks in historical terms. So, it really got me thinking, and through the conversations that Mickey and James and I shared, it really became pretty obvious that, maybe that debit card for New Yorkers that have hundreds of credit cards to choose from wasn't going to be a great advantage. But what about the billions of people that have no banking whatsoever, because those banks simply don't care about clients that can't pay their high fees, and basically also entire communities that cannot be reached through their poor model of brick and mortar branches that are just not economically sustainable in areas where the density of the population is very low or the income is low. So, it was exciting to be able to go to the continent and just go there with questions, not answers, just try to ask how people were doing, how did they manage to thrive without any formal banking system. And in the end, learning from their Susu models and their lending circles, that is essentially what Atlas became. We just added a technological layer of accountability to a very communal solution that they have come about generations ago.
I want to get more into specific use cases that you guys have been working on, but Ori, first, I saw that you used to teach an intro to cryptocurrency class, so obviously you've probably been in this since very early on. I'd love to hear how you got into crypto and then building on blockchain.
Sure. So I actually went into my field of study, computer science, after learning about Bitcoin, specifically so I could understand the inner workings of it and understand how I could leverage it sort of like in projects, the various projects that I would want to be involved in. So I was in undergrad at UVA, and a cryptography professor at my school was teaching a special topics class on cryptocurrency. And I was already kind of interested in it, looking it up on my own, but I kind of saw that as my opportunity to really dig into the details and understand how to program with the technology. Essentially, I took an extra course over like a winter session so I could qualify for the class. Got in the class, ended up diving down the rabbit hole, as they say. It was in about 2013. And then I ended up doing research with that cryptography professor on incentives in the Tor network, which is an online anonymous networking network for sort of like anonymous browsing through something called onion routing. And then I ended up actually teaching the class the next semester with the professor and doing various strands of research on the like Bitcoin scripting language. So hacking the really simple scripting language that Bitcoin offers to do sort of more complex, like multi-party computation that use stuff like the multi-sig scripts. So then I went on to sort of like work as a web developer, as a machine learning researcher, and eventually found Atlas, who synthesized a lot of the different strains of interest that I had in this really elegant way. They were actually working on applying crypto economics to real world issues that people were dealing with in emerging markets, specifically Africa.
So it's obviously a big week in cryptocurrency with Bitcoin just falling under 5,000 and a lot of panic. At the same time, last week, Forbes published an article where the author argued that we're really not going to see mass adoption of blockchain until we remove cryptocurrency from blockchain in the public imagination because there are so many uses beyond just crypto, but most people think about it in that manner. So I'm wondering how you feel about what's going on in the crypto market right now and how you feel blockchain will come out of this.
So yeah, there's a couple of questions loaded into that, but I'll start with what I think of the market, which frankly I don't lose any sleep over. We were a part of an extremely exuberant, like a euphoric market for a year that was sort of like overvaluing everything because of how interesting the ideas coming out of the space were, but not necessarily keeping in touch with where the use cases were at and the usability of these things, the scalability of the existing platforms like Ethereum. So yeah, the prices ran too quickly, and now we're experiencing a long, cold, hard correction. Yeah, I don't blink twice when I see the price dip. You know, we all know we got involved in this space, and the people who stuck around beyond the hype of price are in it for the right reasons, I think. And so, yeah, kind of jumping to your other topic, which was like cryptocurrency, like disassociating it from blockchain. Yeah, I've heard that line of reasoning a lot from people in the existing like financial industry, and I don't buy it. I think it's sort of this whitewashing of what the space is all about. You need a unit of account to incentivize participation in a decentralized consensus protocol. So you can't remove the crypto token from the blockchain. Otherwise, you're just a database that's copied a couple times and permissioned. Like blockchain without cryptocurrency doesn't make sense to me. Maybe in terms of optics, in terms of the wording, maybe that word kind of scares people. So sure, we can come up with new words, but at the end of the day, you're not going to get a collaboration engine that's global and censorship resistant without an intrinsic unit of value that's incentivizing the maintenance of that ledger.
I essentially agree with Ori. I would add, however, I actually like the fact that the market is having this severe blow. I know it sucks for many projects. We all, you know, obviously everyone that is involved in the crypto space, including ourselves, we all suffer, but it removes the noise. There is so much noise in this space. They are making it so difficult for us to explain to consumers and investors that we are the good guys, that we're not just another spam out there, another opportunistic project out there. We're real. We have adoption, we have users, we have transactions, we have a purpose. The market tumbling is immediately removing the opportunists, so you can see it, it's already happening. So that is a good news. And in all honesty, like when it comes to the adoption of blockchain technology, it needs to be brought beyond the programmable, the coding, abstract field. Last week, I was in a panel in MIT, and people were describing, you know, the effects that panelists were describing the effects that blockchain were having in our lifestyles. And everyone was, you know, obviously it's a bear market, and most of them were in the crypto space, and they were all explaining how, you know, the effects weren't that big and made some transactions faster, and made some things more lean and more scalable. And I had to tell them, and I tell you now, the effect of blockchain depends on where you're talking about. When you talk, I believe that adoption will have to happen for the next billions. It will not happen for us. I think that the work that Atlas is doing in the developing economies, it will be a much better way of proving the use of blockchain. Just like for the same amount of money that it would cost to renovate the New York City subway system, the billions and billions of dollars that it would cost to do that, just to have that legacy system work mediocrely well again, you would be able to connect New York with hyperloops to San Francisco and London for the same amount. We don't have those legacy systems in Africa. The effect of blockchain for our communities, the communities we serve, is enormous, and it will be long lasting. We have no doubt. Just like the telephone, the landlines never made it to Africa. They were not cost effective. And the moment that mobile phone technology happened, Africa became the mass adopter and the forefront of 4G and now 5G antennas. We believe that we will be able to do the same thing with banking, just leapfrogging a legacy system that hasn't worked very well for this whole time with something better powered with blockchain.
And let's talk about some of those projects. One of the most fascinating I found is the solar initiative that you are involved with. What role does blockchain play in bringing solar power to, ideally, you had mentioned 600 million Africans who don't have regular access to electricity across the continent?
Specifically with infrastructure, financing, and kind of the managing of infrastructure. The thing that we are pursuing right now, I can give you an example. We're working with a group in Senegal who manufactures these solar-powered pumps. Farmers will have manual pumps that they have to pump every day to water their crops. And now they're these modular, really easily delivered by a truck, solar-powered pumps that cost about $15,000 to manufacture and deliver to a farmer, right? This is something that can increase their yields by order of magnitude. And it's something that you kind of know there's really a very low risk that they're not going to sort of get a return on that sort of investment. Yet at the same time, because as Jose was alluding to, there's a lack of formal credit, these farmers can't get the financing they need to purchase these pumps. What we can do with systems that are on distributed ledgers that are permissionless are issue or put up the request and the issuance of this financing from a crowd, and then actually track where that money goes to make sure that it's not being, people aren't biting out of it, on its way to its endpoint. So to give you a tangible example of how that's going to interface with our client base is that clients can contribute. So, you have a 401k, or you have an investment account, and or maybe even a robo investing account. On the back end of that, there's fund managers who are investing the money that you put into all sorts of different assets to give you some targeted yield. So what Atlas can do in a similar way is use the contributions of the users who opt into these infrastructure investments to bundle up, essentially create financial product instruments that become a bond that's issued to this farmer. So let's say a bunch of different people are contributing $1, and if you get 15,000 people, and then that can execute on a smart contract the order for the next farmer in the queue to receive their solar-powered pump. And then you can have the repayments happening on-chain and at least being tracked on-chain. That's the important thing, that they're held accountable, the farmers that apply and get into the queue. And then the people who initially contributed the money get, their dollar back plus 10%, so like $1.10. And you can do that at scale and it still be worth it. It's not worth it of course we could go in, a bank could go in and structure this sort of scheme that I just described, but it's not worth it for the bank. What would they make on sourcing this, on tracking, on paying everyone back their 10 cents on the dollar? But with a system that is on a permissionless ledger, and when you have the nodes that are doing the due diligence and getting rewarded for it, then you can scale this up and it can self-replicate itself. So you can have at an accelerating rate these solar-powered pumps being funded, delivered and paid back in an ecosystem that's visible to all participants involved.
And how do you approach communities in Africa? Do you have people on the ground? Do you have existing networks?
We have obviously have offices in the capitals of the countries that we serve. We have offices in Dakar in Senegal. We have offices in Accra in Ghana. We have offices in Lagos in Nigeria. Then since it is in the rural areas and low-income areas that Atlas really thrives, in the places where people are unbanked, we have offices in Takoradi, in Kumasi, in Meke, in much, much more rural areas. And this is where we have, amongst our staff, two teams that are essential to our growth. One is the recruiting team, and the other is the launching team. So recruiters, again, these are staff, because as opposed to agents, which are very much like Uber drivers, entrepreneurs that sign up to our marketplace to be able to serve the customers that are also happen to be in our marketplace and earn fees for every transaction. The recruiters and launchers, however, are staff members. And what they do is recruiters will find, the popular guys in their communities, the people that everyone is saying hi to in the streets, those that have a smartphone, and find and just basically tell them about Atlas, help them join and sign up. And then the key to their evolution is the launching team. Launchers will help agents get to They'll be with them for a week, and they'll help them get to 100 clients, which our metrics prove is the magic number for our agents to take Atlas as their primary source of income, which is very important to us because agents are our ambassadors to our clients. Customers depend on our agents to be able to withdraw or deposit money into their accounts. So we definitely want to keep agents very, very motivated and excited so that clients will always have an agent nearby to be able to do their transactions. So again, in Africa, everyone is an entrepreneur by necessity, and everyone has many jobs. But the moment that we get an agent to $100, to 100 clients, they truly understand that Atlas is a wonderful way to grow and to have a very, very good income by helping the members of their community. And we go there every other month to the continent, to Africa every other month, and we've seen how they themselves have been extremely entrepreneurial, extremely smart, and our agents have asked microloans from us with which they've bought motorcycles that they use to be able to bank a greater amount of clients per day to earn very good returns. Like they make really good salaries, and they bank from their motorcycles. They just run around and from market to market, from town to town, and they bank from their motorcycles. And people, they kind of like build their own schedules in a way that people are already expecting them by the time they get there. It's really, really cool to see.
One thing I've been following is the South Korean government has recently created a $400 million center for companies that want to travel there to work on blockchain initiatives, and they've tripled the amount of money they're putting into blockchain, and they also are just putting all of their resources and a lot of their public utilities onto chain right now. And I'm wondering, you obviously have to deal with governments when you go to Africa. Do you see interest from different governments in Africa towards such initiatives as well?
We are very much loved by most players in the space right now. Regulators, banks, telcos. Banks love us, and you'd be surprised, but they do, because we do bank the unbanked. That is money that inevitably trickles back into our corporate accounts. So they essentially call us cash magnets. So they've been very helpful themselves. But then regulators have been key. And the way they see it is we are effectively and in a very, very lean, cost-effective way, we're delivering financial aid that they've been throwing a lot of money at. They've built agencies, governmental agencies that devoted to that sole issue. They've funded multi-million-dollar nonprofit initiatives, and they have all failed. They've all failed because they've set up shops, brick-and-mortar shops, and they've expected people to go from 9 to 5 to those shops, which in most cases for our customers would represent a 10 to 20-mile walk from their places of work and their places of life. So they're very happy with us. They see that our system works, that people are getting those microloans, that the interest in those microloans cannot be beat. We are by far the best offer out there, and for them it's the only offer, unless you're willing to go to predatory lenders that honestly just offer horrible returns. Horrible interest rates that are just essentially a form of serfdom from chieftains in the area.
So just to give you an idea, there's a lot of diversity across the African governments and how they're responding to crypto, the rise of crypto. But the Bank of Ghana put out a statement in January of 2018 that basically was just like a caution, like buy at your own risk or participate at your own risk statement. Implicitly, we're going to take a hands-off, wait-and-see approach. So you can still operate a crypto business, crypto exchange, offer services through crypto, and they haven't updated their Payments Act, which regulates mobile money, telecoms, multiple microfinance institutions. They haven't updated that to include digital currencies. They're planning on doing that within the next 6 months. But for now, it's wait and see for them. And from the lawyers that we have on the ground and the regulators they're in touch with, everything's basically positive/neutral in terms in Ghana, at least.
Very cool. And I mentioned the solar initiatives. Are there any other initiatives that you're working on that you're excited about?
I can tell you that we will be offering the most seamless fiat crypto exchange in the country of Ghana specifically, and then once it's piloted out to Senegal as well. But so that's going to be within the next 3 months being live and something that normal Ghanaians are going to be able to use The reason it will be seamless is because the options right now are very manual, very OTC, sort of like, you know, a guy who knows a guy who you have to exchange your CD, your local currency for USD, and you get a bad rate on that. And then you have to exchange that for Bitcoin, Ethereum, or Rock or anything. And that you get screwed over on the exchange rate for that as well. So we're going to be offering like a seamless end-to-end solution specifically for Ghanaians that already have smartphones. But then we also will be expanding that offering out to anyone who kind of is in network. Agents become instantly turned on as crypto to fiat gateways, walking, talking crypto exchanges.
How about you, Jose?
Again, we have a very long list. I always tell our teams on the ground that we kind of have the motor of a Ferrari and inside the chassis of a very non-aerodynamic car with the hood open, and it seems like every time we try to rev it up, things start flying off of our car, because technologically we've developed a lot. We essentially have our product roadmap developed all the way up to Q3 of next year, because it's obviously hard to be able to introduce new products to our customers without it being confusing. The idea of the concept of mobile money, the example that I gave you about M-Pesa that was then replicated by all the telcos in the continent, has allowed us to go into the space with every person understanding that money on an SMS, money on a phone is real money, and that was key. But obviously training them to understand the concept of an insurance is, or, you know, the terms of a loan repayment is being more of a challenge. And so it is basically kind of like they are marking the speed of the offering that we can unleash. But there are many things that we have prepared. We have already on the tech side, we already have ready bill payment systems so they can pay on their phones, on their dumb phones, their electricity and water bills. We have merchant systems so they don't have to cash out their accounts to be able to pay merchants with Atlas. We have a lot of exciting stuff ahead, and we're just massaging the concepts with our client bases to be able to slowly deploy them in a way that is not, you know, frustrating for them, in a seamless way for them.
You're listed as Access Network, but you're also Atlas Money. So can you explain the relationship?
I'm the president of both Atlas Money, and we just call it Atlas, but yeah, technically Atlas Money, and the president of Access Network. And again, we only call it Access. Access empower us to be able to grow beyond just Atlas. So what we've done is we've decentralized the core banking offering of Atlas through Access, through the Access ecosystem, turning Atlas into a node within this much richer, much wider self-sustaining ecosystem. Self-incentivized ecosystem that is Access Network. Right now, Atlas operates with an e-credit system that is centralized, but Access will allow us to be able to grow beyond just our agent network, and will empower any other agent network in the world to be able to join and seamlessly offer the full banking suite of Access Network through their agent networks. Atlas, I like to see Atlas as kind of like a bank meets the sharing economy, very much like Uber is a taxi company that meets the sharing economy, or Airbnb is a hotel within the sharing economy. And then Access is banking meets blockchain.
Yeah, the Access Network part would allow other agent networks that exist. Agent networks are a common mode of commerce. So there's agent networks for mobile money. Basically, the telecoms use agent networks to onboard new users, and to basically, a lot of them are set up in booths, and different communities have relationships with these agents. What Access Network allows us to do is Atlas can be side by side and even compete a synergistic way with these other agent networks. And so there could be the incentives and also the tracking of transactions across all of these agent networks. So instead of competing on something like trust, the network is transparent and visible to all, so the trust becomes, the trust premium reduces to zero, and so what they can compete on is then service. So stuff like liquidity management, customer service, availability, and things of that sort.